So next we are going to discuss capital investment appraisal. Capital investment appraisal, it involves the sacrifice of current funds in order to obtain the benefit of future wealth. It involves investing now in the hope of generating future cash flow which will exceed the initial investment. Investment in capital project involves large initial financial outlays with long waiting periods before these funds are repaid from future cash flow or profit. Futures of capital investment. Capital investment involves the use of significant levels of finance to acquire assets for long-term use in an organization with the desire to increase future revenue and profit. Capital investment decision. The decision to charter or purchase an aircraft, the decision to lease or buy property, to open a retail outlet, restaurant, leisure center or other such business. The decision to install an energy saving control system within a property. The decision to involve leisure or conference facilities within a hotel. The decision to invest in a central reservation computer system in a hotel. The decision to employ a computerized point of sale stock control system in retail chain. The decision to purchase a new fun activities equipment with a leisure park. The decision by the catering firm to purchase more equipment and using the market trend for the school's meals contract. Features of capital investment decision. The sum involved are relatively large. The time scale over which the benefit will be received is relatively long. The greater risk and uncertainty in forecasting the future revenue and cost. The nature of business, its direction and rate of return is ultimately covered by its overall investment program. The irreversibility to some project due to specialized nature of certain asset, for example, some plant and machinery brought with a specific project in mind would have little or no scrap value. In order to complete project on time and within project budget, adequate continuous control information is required. Capital investment is a long-term and the recoupment investment may involve a significant period of time. Next, we are going to see factors to consider in assessing the capital project, the size of investment, the phasing of the investment expenditure, the period between the initial investment and the asset actually generating the revenue and profit for the business, the economic life of the project, the level of certainty regarding the project case flows, the capital budget requiring the degree of risk involved in the project. Next, capital appraisal methods. As capital investment decision usually involve significant amount of finance, it's important to fully evaluate each decision using sound appraisal decision or techniques. The main method using to evaluate the investment in capital projects are accounting rate of return, payback method, net present value, internal rate of return. Under this method, accounting rate of return, you are earning the organization a good profit. Payback, it comes cash outflow. Net present value, it comes cash inflow. Internal rate of return, cash flow. Next, the accounting rate of return is based on operating profit. The operating profit of a project is a difference between the revenue earned by the project less than the operating cost associated with the project including depreciation, All other appraisal methods use net cash flow as a basis for appraising capital budgets. This is due to the nature of assessing capital investment projects where one must spend cash now and reap the cash reward later. The calculation of accounting profit is not concerned with the time of cash flow. This is due to the accruation concept where the profit is calculating depend upon the expenses charged for revenue earned. Thank you.